Hello, everyone. Yes, Kevin, you got everything correct right here. How are you? Everyone doing okay? Hello, Rena.
Hey Dale, can
So,
you hear me okay?
yeah.
Okay, just making sure. Yeah, I'm gonna let you go. I'm still here. I messed with my wires yesterday, and so I just want to make sure my microphone worked okay.
Oh, yeah. Okay, buddy.
Cool. All
Sound
right.
loud
See
and
ya.
clear.
Cool.
Doesn't Blake sound good this morning? He
It's
always sounds good.
better than usual, yeah.
Yeah, I mean, he sounds, always positive and, with all the pressure you have to making a living off the market, which isn't easy to maintain a great attitude every day and come in, we take paper cuts here and there and keep going. I want to congratulate everyone in here that attempts, um, one of the most difficult things that you can do. Oh yeah, yeah, it could have been a model on a Forex magazine cover, definitely. All right, so Euro's really the weak sister. We have new highs here, and maybe we try this wedge line up here, and the Dixie actually is taking out this line that I had drawn for a while. So I thought we'd go there. Wow, trade that. Uh, but it doesn't look like we're going to get any lift off it, and we're near the end of the week. So if I look to fade the dollar with what's going on today with cable up 75 and Aussie up 50. Aussie worked for a day trade yesterday. That was it. And now it's kind of blowing out the divergence on a lot of different time frames. There's a 15, blew it out. See that? Blew it out. I'm talking about this is what blows it out over 70. 4 hour maybe. But the structure on Aussie looks a little better than the euro at this point of time. Maybe, maybe not. But the euro is not on a lot of time frames blowing through the 70 RSI level. So that's interesting. I haven't done anything there yet. Yen, uh, I'm looking for a reason to buy it. I don't see it. So like Blake was saying yesterday, it's not just the price, it's how it gets there. Okay. Extend it down. I know we're close to a bounce, just like I know we're close to a top here too. Okay, in the S&Ps. So one thing to pay attention to that could be an inflection point is we're almost at winter, right? I believe Monday is the solstice. Okay, I know it's a little, too Ganish for most people, but on a Thursday, I'm not sure we're going to get a turn this week. Maybe it's Friday, Monday, Tuesday type of thing. So we'll see. My view on Nasdaq actually looks a little better than the S&Ps, but here we're above 70, so 15-minute, we're not done yet. See this? We're not done yet. You have 3 feet of snow, Ziggy? Well, I'm just talking officially by the calendar. So we're not there yet. Maybe it's going to be that fib extension number that Blake and Steve have been showing for weeks now, 3740. I have to hand it to both of them, and especially Steve. He's had no interest in shorting indexes yet. He's had no interest in trying to bottom pick the dollar. And anyway, these guys are good. So I may attempt this at the blue line up here. Okay, you can't see it that good here, but it comes in and not that far away from where we are now. You could see it here on the 15-minute. Maybe it's a 1 hour, 2 hour. Yeah. So 2260, maybe I'll just use a money stop. We're almost there. Oil, again, with the S&Ps, it is starting to look a little heavier to me in the oil. Just wanted to show you. Okay, we're not confirming in oil either, but I know some guys are looking for 52. So yeah, I guess here's the verdict. I have no conviction except for maybe attempting the euro short up there. On almost anything, the metals are flying again. 1881, this area is resistance. And I guess I shouldn't have been suspect of silver, although it's not screaming like it did yesterday. It still looks pretty good. I mean, everyone's shown this breakout of the triangle, and so far they're right. So I'm a spectator. I'm not a speculator today. Yes. So maybe Blake has some more actionable ideas for you. I don't have them every day. And the difference between now, besides my age and the way it used to be, is that I wouldn't admit that I couldn't find anything to do when I couldn't. And when I find myself searching for something to do, it's kind of a signal that, I don't see anything. And when I do, I'll act. And so I'd rather bore you than come up with something that I don't have a lot of conviction about. So uh, I know the rest of the team. I'm such a kid. Yeah. All right. Anyway, oh, thank you very much. I've aged nicely like a wine, a fine wine. Okay, so Blake, your mic is good. I just, don't have any, solid ideas. There's
Oh,
nothing
I've
here.
got
I'm
a lot of
fading it.
ideas.
Do you?
Lots of ideas.
Okay.
But really, they all have to do with counter trend,
Right.
buying the dollar, and that is,
Yeah.
as you guys know, is proven very, very risky to do. And so there's a lot of there's so many currencies are knocking their head up against big
Resistance.
resistance levels
Yeah.
right now, and
Yeah.
big support levels that I mean, you can um hold on real quick. Do you guys see this headline here? I'm going to go ahead and put it in the chat room if people aren't looking at it, about the fisheries.
It's quite far apart.
Yeah, they're still far apart. If again, let me just show you what you guys see here. This is Live Squawk, by the way. You get this with Forex Analytics. Now, we're going to be offering the audio portion of this to our clients, and it's a discounted amount than what you get with Live Squawk going directly to them. Just so you guys know, and that's getting set up here here in the next few weeks. But this all these headlines that you see here, this is some of the important Bloomberg headlines, Reuters headlines, which is nice. Like I don't have Reuters, so I have to go to Live Squawk to get the Reuters, key headlines here. But it's great because they're here. Bloomberg ones I obviously get pretty quick because you can see like this is like my Bloomberg feed, right? Even though it's there's certain events that it's really important for, but like right now, regarding some of these Brexit talks, it makes sense to have them, and same with stimulus talks as well. But let's talk a little bit about the, as far as where currencies are at. We're in the middle of that melt up stage that I talked about on the week ahead video. And you can see, let's go over to the S&P here. The S&P continues to grind higher. We're up near what could be seen as resistance, the big 127% extension. This is why this is such key resistance, but I still think we're going to break above it. This is the 127% extension of the post-COVID move. So COVID, lockdown, right? Lockdown, Dale.
Yeah.
Rally, we're right there. I still think we're going to break above this, but we might stop here today. You know what I mean?
Yeah.
So, and it's not just the S&P. Well, let's actually write that down because we might as well do this while we're on it, right? 37.33. And let me, let's make sure that those numbers are very accurate here. I want to do this for you guys. Just that. I'm going to use a magnet here just to make sure we're on the high there. Then I'm going to go to the low, which that should be the low. Okay. Let me double check that. Whoops. That is okay. So now reset the chart, and that comes in at 37.30. Okay, so that's resistance today. 37.30 for the S&P. Do I think we're going to break it? Yeah, like I explained in the week ahead video, we should break above that. We should. With stimulus coming, a Brexit deal, that should all happen. However, we also are faced with a lot of currencies right at resistance. Dale, I was just saying I think there's a lot of actionable ideas if you want to take advantage of them. The real question is, do you really want to take advantage of them? Because it is, we are up against really key levels of resistance now. Let's just talk the euro. So the euro is almost at the 161% extension of the summer's consolidation, right? That comes in at 122.60, and also
that's where I'm
it's the 161% extension of yesterday's
interesting
move. Yeah, so that all comes in at 120. Let's just call it 122.65. Okay. Oh shoot, I forgot to finish up what I was doing there. That's all right. We'll come back to it. It's bullish, but we're at resistance, and does that mean that we're gonna, that the euro is gonna stop? I don't think so. But that's, where, I mean, it may stop intraday, but I'm just saying that that's where we're going to see a confluence of resistance. I think now any move back down to 122. Well, I'm going to write down a couple levels. First of all, 121.70. Oops. 122.05, right? Is that what that number was? Oh, I'm sorry. It's 122.10. Oh, okay. So there's your levels of resistance, right? The next up would be the cable. Okay, so the cable is almost at the 127% extension of this move, and let's just acknowledge the fact that we're well above 135 and 135.50. So we're in breakout territory right now. I'm going to write down intraday support at 135 and then 135.50. And we are in bullish territory, breakout territory, and next resistance is 136.50. Now I know there's all this, we're going to get a deal by Friday. We're not going to get a deal by Friday. The cable's breaking out. So, deal or no deal, the pound is breaking resistance. Now, obviously, I think at this point, you'd have to get all the way back down below this red trend line here, which would be, roughly 134.50. You got to get all the way back down there before anybody's convinced that, oh, we got another false breakout. Anybody that's fallen for the false breakout story on the cable is, they keep, either waking up, after closing out their false breakout short, they keep getting up and going, man, this thing is still strong, or they keep shorting into false breakouts and then it comes back in their face. So you got to be careful here. I think that the pound actually looks pretty bullish. Like I said, deal or no deal, it looks bullish. So here is the Aussie, and I actually had Paulie. It goes. He actually pinged me after hours or in the middle of the night, and he goes, "Hey man, did you know that the Aussie dollar is at the 38% retracement long term?" I'm like, "Yep." I think I tweeted that chart yesterday. Matter of fact, or did I? Can't remember if I tweeted that or not. Anyway, but I know we've been talking about it. The 38% retracement is right here at 76.31, and we're at resistance. So can you short the Aussie right now? You can. I mean, you can if you want to. It's really bullish. 161% extension of this. Oops, I didn't mean to do that. Let me undo that. I had to undo the magnet there. So the 161% extension of this consolidation pullback here comes in at 76.75. Maybe we make it up there. I'm gonna write this down. But we're here, so let's this is very important resistance, but we could make it up to 76.75, right? It is bullish. Support. By the way, the Aussie employment data was strong. They created, I want to say it was 90 or 70,000 jobs. It was big. It created last night. Hold on one second. 90,000 jobs. Was expected 41,000. So big move. Alexander says, is it true that New Zealand claims themselves corona-free? I don't think they've had a new coronavirus case in like 13 days or 15 days that's from New Zealand. They've had cases that have tried to come in, but I don't, anyway, just to answer your question, Alexander. So right now, support should be at 75.75, which was resistance yesterday, I believe. And then down here at 75 cents. Oops. Okay. Kiwi, bullish. The Kiwi had great economic, no. Well, it did have great economic data. But more importantly, the RBNZ basically said, we're not worried about the New Zealand strength of their currency. So in the chat room last night, I was like, well, if they're not worried about the strength of the currency and the Bank of Canada is, then the New Zealand Canadians probably, just based on that, is probably the best trade around right now. And it's been moving higher all night, since I wrote that in the chat room last night, which, was probably about 12 hours ago. But if you just think about like the central banks, the differences in opinions there, the RBNZ basically says they're not going to try to talk down the New Zealand, not at these levels. And the Bank of Canada is trying to. I mean, Macklin twice 2 days ago was doing that. So anyway, so the Kiwi continues higher, and we are at the 50% retracement, long-term retracement of the New Zealand dollar. So that's like long-term from high to low, just where the Aussie's at the 38% retracement, the New Zealand dollar and the Kiwi is at the 50% retracement. And it's right here. I mean, it is 71.50 basically. So can we go beyond that? Yeah, we already have. So let's see where else we could go here, just to see where our next level resistance. So I'm going to take this high to this low, this consolidation. We're at the 161% extension of that move right now. Hold on one second. I had to sneeze. So why is the cable spiking up here? UK spokesperson. Oh, this says UK will not extend Brexit negotiation with EU into next year. So basically, deals got to get done. Maybe that's why it's spiking back up again. Seems like it. Anyway, going back to the Kiwi, I just have to start writing round numbers now. I mean, I think we're at resistance here. So I'm going to write down 71.65, which we're at right now, just so you guys know. And then after that, 72 cents. I mean, that's not even good resistance. Okay, support for the Kiwi now is back at 71 cents. One of the other things that you got to keep in mind, Dale, are you here right now?
Yeah, buddy. Yeah.
You know, one of the other things you got to keep in mind going into this week, into today, actually today and tomorrow, we have the S&P rebalancing.
Oh yeah, that's this week, huh?
Yeah, and it's supposed to be it's supposed to be negative for equities. So
Also should be triple witch, right?
yeah, and triple
Third
witching.
Friday,
So
everything in there.
So we just have to be a little careful with, I know stocks are rallying right now. I get it. But you just got to be careful with buying an extended rally like intraday. So what I would be, the way I'd probably approach it is if I was trading the S&P, which I'm not, what I would do is I'd look for levels to buy the S&P versus trying to buy it up here, knowing there's a lot of resistance up here, knowing there's rebalancing going on. That would be my approach. If I was going to be trading equities, I would just be looking for dips. And matter of fact, you know, first level support will probably be down here at 3,700. Then after that will be at 3,660. So I'll write those down. Oops. There's that decimal point there. Okay. Dollar Canadian. So the dollar Canadian, one of the observations that you have to make regarding the dollar Canadian is it did not hit new lows as the Aussie and the Kiwi hit new highs. Now, remember from, you know, just a moment ago when I said about the, you know, the Bank of Canada, you know, governor is already trying to talk down the Canadian dollar as it is verbally. So we will probably find some support down here at 2670 if we make it, and resistance is going to be at 27. Well, I'll just write it at 128. Well, what is the spike high? 127.90. So I'm going to write down those two numbers. It's still bearish. But just keep in mind that the difference between the Aussie and the Canadian, or the Canadian and the Aussie and the Kiwi, is the Aussie and the Kiwi keep surging higher and hitting new trend highs where the Canadian has not. So just, you know, that's a key
That's
observation.
a very good point. Yeah.
Yeah, and
same with MEX too.
Yeah, same with the dollar MEX. Yeah, exactly, Dale. And so those are the things that I know I made this point a couple of days ago, but I'll make it again. It's like, okay, if you're going to go long the dollar, you know, you're probably better off against the Canadian or the peso versus the Aussie or the Kiwi, you know, because they're just not making new lows here. So it's just, again, it's an observation, and I'm not
saying
saying
market message.
I'm sorry.
It's a market message.
It
could end up being a tell, you know. So
yeah, and yeah, we you know, we could look back tomorrow and the dollar Canadian's trading at 128.50, and we go, well, you know, that was obvious, you know, in hindsight, because It just wasn't going down like the Aussie and the Kiwi were going up. That's not to say it's going to happen. I'm just saying if there's that risk. I think that they can bounce a lot more aggressively than the others. So with that being said, this is support right here, 1970 for the dollar Mexican peso. Resistance is going to be at 20. $19.70. And remember, I've been putting this on range because when it broke here, it was bullish for like a day. And then once we failed at 2020, I put it back in range. But this is a difference between the other dollar pairs, where the other dollar pairs show dollar weakness. The dollar Mexican peso is a little different. Let's go to the dollar Swiss. So the dollar Swiss is in this channel. Target still 88.05. Resistance right now is 88.90. So that's it. And I do think that the Swiss National Bank has been a little bit more aggressive here, especially with the Euro Swiss last couple of days. Let's go over to the US dollar Norwegian krona. So we have completed the double top. It is complete. We actually broke into new trend lows. We're at near channel support. Let's see. Next support is going to be at, let's see, Stelios. The next support for the US dollar Norwegian krona is at 0. Is that correct? That's the next level support
line chart.
Just kidding. You guys think I'm incapable of
it could go negative like
joking
crude.
with you guys. What's that?
It could go negative like crude.
It could go negative, yes.
Yeah.
The thing is the US dollar Norwegian krona is breaking down. And so while we're below 865, it's bearish. Now, next support will probably be I'm making up channel support here, which, well, I mean, it is channel support. So, I mean, we might get to 855, but I'm going to write that down. It's next level support. It's not great, but 855, 865, bearish. And I should put zeros behind here. But you guys get my drift. But it has completed the double top. So, and one thing that would be very bullish, the US dollar Norwegian krona, and I'm going to throw this out there because you just don't know with the dollar, because the dollar's at so many key levels against the Aussie and the Kiwi and the Euro and the Canadian. There's so many key levels that are being tested right now that could turn the dollar just for a day. But the US dollar Norwegian krona, if it gets back above here, above 865, then it's a false breakdown, right?
Blake, sorry to interrupt. On the weekly chart, it's making a new low. And if we close on the weekly chart with this new low, that's obviously very bearish technically. But like you said, if it goes above 865 and that becomes a false breakdown also on that, then I think that's going to bounce pretty hard.
Yeah, I mean, it's possible, and I mean, it's gone. So, oh, wow, here's the Euro's doing its deed. Here goes the Euro's just trying to get up there. It's just doing everything it can to make it to that 122.60 level. So good job, Euro. You've almost done it. And look, you guys in Greece, you guys are going to be able to travel again. You can travel the United States on the cheap.
Yeah.
Doesn't that sound exciting? Come to the land of coronavirus.
I wish I could come to the States soon, but I don't think it's happening.
By the way, the coronavirus thing is not that bad. Not that bad. Just stay out of its way. That's my my slogan. Just stay out of its way. Wash your hands. There you go. Okay, let's get into the charts.
Yes, we just had data. Thank you, Simon.
Building permits.
Yeah, and housing starts better than expected, but only by a little bit. Jobless claims slightly worse than expected. Yeah, we can keep going. We have Philly Fed. It hasn't come out yet, but hopefully soon.
Philly Fed will probably be the more important piece of data. Let's see it. That might actually be more of a mover. Let's see if
somebody's saying 11.1. I don't know where they're seeing that, but I trust them.
Let me pull it up on Bloomberg here. Let me see.
Oh, there you go, 11.1. Yes.
Yeah, 11.1. Wow. So it came in a little
lower,
worse than
yeah.
expected.
Yeah.
Interesting. Okay. I don't know why that isn't populating. Anyway, let's continue on with the dollar index. So here's the dollar index. We have hit the 161% extension. Dollar index just getting clobbered here. Now there's 261% extensions. So this one right here, this is the post-COVID move. So think about that. This is the COVID spike higher, right?
Yeah.
Then we're at the 161% extension if we get to 89.50, because we're already below the 161% extension of the summer consolidation. Okay, so that comes in at 89.50. One of the other things I want to point out regarding this move is that if you go to a 4-hour chart, you go to intraday charts, it is still divergent. That, it was divergent yesterday and it's still divergent here. That doesn't mean that it will stop. It just, it is definitely a warning though. Like in my opinion, we're probably going to get to 89.50. This RSI is still going to end up being divergent. Like we'll probably get to 21 or so on the RSI, but we'll end up being divergent and then bounce. So that might be the level that we bounce from. Just something to think about. Okay. Resistance for the dollar index. So the resistance, while we're below 90.40, there's no reason to be bullish. Now you may be trading, if you're trading counter trend and you're like, well, I'm trading counter trend. No, there's no reason. No, you don't want to be comfortable. Don't try to get comfortable unless you break back above 90.40s. Does that make sense? So like, let's say you short the Aussie for whatever reason, because it's up against resistance, and you short the Aussie. Well, while we're below 90.40 on the dollar index, I think you have to continue to stay bearish, right? Or be cautious with your trade, even if you're profitable. All right, so the dollar yen. The dollar yen just took out the lows here. Now I'm going to show you something. 103, we took out this support at 103.15, which I'm going to write down 103 as being support. Now I want to show you this. This is a weekly chart for the dollar yen. Now, this is not the best trend line because, you have to go through some wicks here, but, this weekly trend line comes in somewhere around where we're currently at, and it might actually be there, but it depends on how you draw it. I guess what I'm going to try to say here is you got to be a little careful because the dollar is at such key support against a lot of different things. So just, if the dollar yen gets back above, well, actually, I think 103.25, then it might actually squeeze a little bit. But for right now, it's bearish. And gold, last but not least. Gold is bullish because we broke this downtrend line. We actually respected that trend line yesterday on the spike lower. So, and we're now above this 1875. So now we're testing the 618 retracement. That is at 1888. After that is 1922. So I'm going to write down both 1888, 1922, and support is 1850. All right. And that is your bias chart. So,
and are you keeping it in range or are you moving it to bullish?
Oh, sorry. Thank you. Yeah, that's got to be bullish near term, like silver is too. Okay. So thank you, Stelios, for the reminder. And look, this bias chart is pretty biased. That's horrible. That's horrible. Alexander says, isn't the dollar index at weekly resistance? Weekly resistance? You mean weekly support? Maybe. Let's see.
It's been dropping. It can't be in resistance.
It has forgot what resistance looks like.
Yeah. Let's see. Weekly support. I mean, I would say horizontal support comes down at 88.20s. So, I mean, we still got a ways to go to get there. There might be an 88% retracement that we're coming into here. So let's see. The 88% retracement all comes in right where we're at. I mean, slightly below where we're at. So some confluence of support here. I mean, and maybe this, I mean, look at all this congestion. So I think there's reasons for the dollar to stop here.
Euro's coming off, Blake, right from your number, and that blue wedge line I showed earlier to the crowd.
Oh, well,
went to 60, didn't it? 59.
Yeah, I mean, we got pretty close to 2260, and showing a little bit of a reversal. I mean,
58.8 is close enough for government work.
Yeah, I mean, it's pretty darn close. I think you just have to be really careful with dollar shorts here. Again, I'm not advocating that you should go, balls to the wall along the dollar. I'm just saying that if you're short the dollar and you've been riding this short train, great job. Be really careful around here. Okay. All right. So guys, good morning. How are you?
Morning.
Bonjour.
Shalom.
Bonjour.
Macron was tested positive. Did you hear that?
Yeah, I saw that.
He should be careful because his wife is as old as the pyramids.
68 years old.
Oh my God, I can't believe you just said that. But I'm laughing a lot.
I think she's as old as Dale. I mean, that's older than the pyramids.
Really? What's her phone number?
Nice one.
All right, guys. Well, hey, I want to thank you all for being here today, and I'm going to pass it over to Steve and Stelios and the old as a Macron's wife.
Pyramid. Yeah.
And
King Tut.
King Tut. I want to thank everybody for being part of the Forex Analytics family and supporting us. And I'll see those of you that are Forex Analytics subscribers. I'll see you on the daily roundup here in like 4 hours. So see you guys.
Thank you.
Good luck, Blake.
Thanks.
Bye-bye.
So
it's good to be old.
It's good to be old.
Then the alternative.
The alternative is not to grow old, which is not good. So yeah, it's good.
Yeah.
Okay. So we have some more news today. Let's start with the obvious, Brexit. We got a headline that Barnier is saying that a deal is possible by tomorrow. And then very shortly after that, on the UK side, there was diplomatic sources saying that it's unlikely to have a deal by tomorrow. So there you go. You have the two possible outcomes.
Now we have both versions. It's great.
Yeah. So again, as I said yesterday and the day before, I'm not doing anything or responding until we get something firm. I still think we will get something, and things are pointing that way. And I remember a week or two ago when I was saying, look, if there is a deal, hello Aliki, if there is a deal, I think we'll see cable go to 140, and people are saying, "Wow, 140? Why there?" Well, we're almost there already.
We're at 136 without one.
Yeah, I think we'll get there. We'll probably shoot through it. The question is, what do you do after that? It's probably going to be, like we said, buy the news. Buy the rumor, sell the news, or basically sell the news trade. Although I wouldn't go in and sell it straight away. I think once it goes, it's probably going to push through a little bit, and then when it seems to stabilize, then I think it's probably
it will also depend with what happens on the dollar, meaning when the dollar is finally going to get some respite and
yes.
rally a little bit.
Yes. On the BOE side, we had the Bank of England today. They didn't change rates. They didn't increase QE. They did nothing. They did mention a few points which are worth talking about. They said that the vaccine is likely to reduce the downside risks to their outlook. Asset purchases are going to be under
review. That's why they get paid the big bucks. To have insight like that.
Asset purchases. Imagine somebody says, "Oh, the vaccine is going to increase downside risks." I mean, come on. Anyway, they keep asset purchases under review. Their outlook is uncertain. Blah blah blah. So nothing new. I don't know if anybody was expecting something more dovish. The pound was strengthening into the BOE and strengthened a little bit more afterwards, but really nothing major. We also had the SNB today. They gave us nothing. Norges Bank, for those who follow them, and the krona. We talked about USD NOK and how it seems to be breaking down. The Norges Bank met today. They didn't change rates. They left them at record lows. But they did say that their forecast is now for flat rates for a year and then a gradual rise from the first half of 2022. I know they're talking about
which is like super bullish,
year and a half forward.
Yeah.
But
which is super hawkish because there is no other central bank that would even mention the possibility of ever raising rates.
In any case, it's their projection, even though it's 1.5 years ahead and can change tomorrow, is a faster rate rise than projected in their previous September report. So that was viewed as
in
a
today's
positive.
Central banking, even mentioning the word,
the
phrase raising rates is like, you're super hawk.
Yes. And so that was from Norges Bank. Also worth mentioning, late yesterday, one of the ECB people, was it Lane? I can't remember. One of them said, we're very vigilant about the FX rate. So
really?
This is another mention of it. And although people say, they don't care, this and that, above 120, they're always in Eurodollar. I mean, they're always vocal. Can they do anything about it? That's a different story.
Yeah, sure. They can start paying off the US debt and help them decrease the deficit. That's what they can do.
Borrow at negative rates.
It's a great plan.
Borrow at
negative rates and buy US treasuries.
Yeah, actually they could do that. But anyway, I don't know what they can do, but they are looking into it. And this takes me back to Trichet when he was talking about vigilance. Remember that and all that, the V word and extreme vigilance and all that. That was fun times.
He knew what he was talking about, as it proved to be the case. He was really vigilant.
Well, he made, I think, a huge mistake. He made a huge mistake just before leaving when he hiked rates. I mean, that was crazy, but whatever.
I was talking about the incident with the cleaning lady in the hotel room.
Oh, no, that was not Trichet.
Oh, that was another guy.
That
from
was
the IMF.
The IMF guy.
Oh, yeah. Oh my God, I confused.
Yeah, they're all the same, right, Steve?
It's the how is he called?
Strauss-Kahn, Dominic Strauss-Kahn.
Strauss-Kahn. Yeah. Sorry.
Yeah.
Strauss-Kahn.
Anyway.
My mistake. Sorry, Mr. Trichet.
French guy, right?
Yeah.
Can't help
Dominic Strauss-Kahn. Yes.
Oh, you missed a spot on the floor. Can you?
Oh, naughty Dale. Okay. So, what else to talk about? We had Australian employment was better than expected. Unemployment rate better than expected. Who cares? Eurozone CPI 0.3% year on year. The same reading for I think the fourth time now. Sorry, minus 0.3. and still way off from the target. And we saw the US data, nothing else today. So
did I miss it? Did you talk about the Kiwi data?
no, I did not. That was last night, wasn't it?
Yes.
You mean the central bank? Blake brought it up a little bit.
Blake,
okay.
Go ahead.
Yeah, but no, but we got GDP, which was a lot better than expected, and revisions were higher as well. But that's been kind of the trend now lately, right? I mean, we're expecting 13.5% quarter on quarter. It came in at 14. Okay, it's 0.5%. I know it's big as a difference, but as a percentage of the number is not that much. It's like 0.1 when it's at 2%, or whatever, 3%. Anyway, and what else is there to say? Okay, yeah, they also, let's mention it. The US deal is going to be probably done by tomorrow, and we've been waiting for it. I think it's priced
Big
in.
words, Stelio, big words.
It's priced in either way tomorrow.
Yes,
Monday,
it is.
Tuesday, it doesn't
It is
matter.
priced in. That's for
priced in.
sure. I mean, the market has already priced in whatever has to do with this interim deal, let's say.
I mean, imagine in these times if somebody, or a government or the Senate or whatever, they bring out like a bomb like that basically they don't agree. I mean, that's going to be huge. They don't want to disturb and distress markets, I'm sure.
Yeah, there is no only downside potential from this point on, because the fact it will happen has already been priced in. So if for some reason something goes wrong with it, we should see a negative reaction lower in a risk.
Yes. Otherwise, we see cryptos today. They're just going to the moon. I don't see any particular news item. It's just basically they're catching up with dollar weakness, and many people.
It's also probably this enthusiasm that since the initial rejection from the previous high wasn't in essence didn't lead to like a big sell-off. Now a lot of people that were skeptical about buying at all-time highs are probably stepping in like, oh, okay, we made it through, we cleaned the previous high, and from this point on probably this is support. Technically speaking, that's the case indeed. Be careful here a little bit. We're testing the 127% extension of the move lower from the all-time high to the 3,000, less than 3,000 low that we had following that. So that's the first upside resistance, since we are at all-time territories. The only type of resistances we can be looking towards is fib extensions. There's nothing else. There's no prior price action here to look at support resistance zones. So it is what it is, and Ethereum is doing some catching up, since you mentioned it, Stelio, but still it remains far away from its 2017 all-time high.
Yep.
Okay.
And last but not least, metals, they're rallying again. I think we're getting to remember we've been talking about silver. I think we're getting to the crunch point.
Hello. Here I am, poking my nose over the channel.
I want to see a weekly close in silver above 26.5. If that happens, I'm going to say, okay, the pullback that I expected didn't happen. I'm going to start scaling in. So waiting for that. And see how that goes. But other than that, I am doing very little, and mostly watching until year end. I'm going to be trading very lightly.
Yeah, me too. I'm riding the NOK trade, which has been very kind with me.
Yes.
And waiting for like a big rebound at some point in the dollar to squeeze people out, so I can sell dollars. Actually, that's my plan for my 2021 plan going forward. Waiting for the squeeze of the weak dollar short hands, and then stepping in.
Yep. Okay.
And as it seems, I'll also have to chase silver, because as you said, Stelio, and as I was afraid from the previous days, doesn't look very likely that silver is going to give us the opportunity to buy lower.
Yeah. Well, it ain't over until the fat lady sings, but it's looking close. It's looking close now. Let's see. You never know.
Yeah. It's flirting with a breakout. I mean, For me, today is going to be important because we're currently trading above this channel. So if we do, trade like this for the rest of the day and we close above it, that's going to be another indication. And then tomorrow is the last day of the week. So if we also close on the weekly above this channel, more or less, I have this as a given following that. I mean, as a very, very high probability thing. So it is what it is. Now,
Indeed.
having to do with the rest, we already just mentioned that silver seems to be breaking out, so there is not much to say more about it. We're breaking through the channel. We're breaking through the 50% fib, which was also previous lows there, if you see. So I do understand why Stelios is looking closer towards 2650 because we have this horizontal support resistance area. I would actually place it a little bit lower, somewhere at the 2620, 2630 vicinity. But what is like a few cents among friends. So these are the things I'm looking for in silver, and I'm afraid that silver is gone. Natural gas testing trend line resistance as well, so keep that in mind. Crude oil still pushing higher. Keep in mind momentum has definitely slowed down, and there is always like the probability of this type of ascending wedge to lead to some type of a decent pullback. In that case, I would be looking for a pullback towards 42, which seems to be close on the chart, but keep in mind that's $6 lower, right? And $6 lower from where we are is more than 10% lower. What is it, like 12, 30%, 13% lower? So 42 should be the first area of support if and when we finally decide to make a move lower and correct this push to the upside. Now, as I guess Blake mentioned, Euro USD is breaking higher, pound is breaking higher, dollar is breaking lower from this triangle, Aussie is accelerating higher, right? Kiwi overnight, based on the news, also broke through this. We talked about this confluence of resistances yesterday, the 78.6% fib and 127% extension of the last bearish leg for the Kiwi. So we seem to be breaking above that. Another bullish development here. What can I say? I'm coming every day here and telling you not to fade the dollar's weakness and not to fade stock strength. And I don't have anything new to add to that. I mean, that's the name of the game until we see something changing. But keep in mind that for every day that passes and we get closer to Christmas, the chances of something like that happening pre 2021 decrease substantially because we know that usually as liquidity dries out, nobody wants to fight a trend. And usually they keep pushing these trends in the direction that they were moving, prior to that, much more easily actually, right? Because with a lot less money, you can move the market as much or even, more than you could prior to that. So, if you're waiting, for some type of sell-off, getting close to year end, I think the chances are definitely against you and not in your favor. So, that's all I have to say about that. Now, somebody's asking about palladium. Somebody actually was asking about the BRL. We're going to have a look at it. We haven't had a look at it for quite some time. So palladium and platinum, let's have a look at both of them. First of all, platinum probably proving here what I was expecting, that this was some type of a corrective pattern. I didn't know yet if this would prove to be some type of a flag. There is a small chance that that's still the case, but a small chance. Most likely this was a triangle and we've already broken above it, right? So I'm expecting more strength here. 1,170, the next upside target. Palladium still consolidating in this long-term triangle. Nothing to do until we break higher. So, that nothing has really changed here. Copper still going, right? I mean, yes, momentum has somewhat slowed. We're seeing some divergences, but, don't bet against it. Nickel.
See your gold chart, Steve?
Sure.
See what you're looking at there?
There you go. Here's gold.
Oh, okay. So we have a throw over on the channel. What was that one before that?
No, but channel is still
Oh,
perfect.
yeah, okay, but what was that one you had up right before that? That was an interesting chart. What did you
Uh,
have? Was it the
no,
gold
these
silver
are
ratio?
ratios.
I don't know. No, that wasn't it.
Ratios.
That's okay. It looked like a throw over some kind of channel.
Ah, the nickel. Yeah, probably this one you mean.
That's okay. There, nickel, yeah.
Yeah,
Okay.
yeah, it's nickel actually.
So
Very,
it made
very
a new
strong as well.
all-time high, or took those highs out from quite a long time ago.
It took the highs, the previous
Yeah,
highs.
yeah. I wouldn't be long nickel, especially if we get back. You know what? My mom used to say, do you guys remember Jimmy Durante? He was an old entertainer, and
No, I don't.
he had a very big nose. My mom used to say, boy, I wish I had a nose full of nickels. His nose full of
Yeah, I know the expression though.
Oh, okay. All right.
Yeah.
Anyway, that's
So
nickel. Never traded it.
let's go for a trade. USD BRL. Last time I had a look at it, it was there as you see from the drawings. And as I was expecting, because the formation was textbook, right?
Yeah.
As I was expecting, this rebound higher was corrective in nature. I mean, you can see them like from a big distance away. And for those of you that don't know, what I was drawing here is I didn't draw twice what I believed was the direction. I drew the direction by the red one. The green one was a measured target of the first leg lower, the second leg lower, because we were trading back there. I said that if we get rejected, from here, that's where we're aiming. But we did produce another high, respecting this
jiggle.
wedge, which means that the measure should be moved there, and that actually measures down to 463. So exactly what we drew back then.
Barney rubble.
It is pushing lower. I'm not enthusiastic about the momentum I'm seeing, but it is pushing lower. Here it is, testing the next area of support. For those that are long-term bullish, they will immediately say that in the long-term chart, this cap and handle formation potential has not yet been invalidated. But you know me, I mean, my macro thesis is that the ruble should do very well over time, especially against the dollar. It has no reason not to. Now another. Yeah. Oh yeah, me 100%. Yeah, right. Right.
Steve Volge, tear down that wall.
Yeah. If it was up to me, there would be no communism, but it's not up to me. So, and here is another favorite of yours, Dale, the USD Chinese Yuan, which is still going and going, and
very orderly.
Orderly on one hand, but in this slow and orderly fashion, the sure thing is that we are more or less at 2.5-year-old lows, right?
Yeah.
And that says a lot. So yeah, there we are, 2.5-year-old lows. Nice. And as long as this channel is holding, don't bet on a reversal higher. I mean, there is no reason to do so. Let me go through some of your questions and see if there is anything else. Dale, you any requests? DXY, we did cover
yields,
that.
Steve. How about yields?
Yeah, absolutely. We can have a look at yields.
They look like an EKG.
Here they are.
Someone in a coma.
Yeah. Here is the 10-year-old, the 10-year yield. So my thesis remains that this rebound higher in the yields so far shows me nothing impulsive in nature, right? Yes, somebody can claim that we're building a long-term bottoming pattern, right?
Yeah.
And yes, I mean, that could be the case. But as I've said multiple times, you cannot ignore the trend, right? And the trend is quite clear here. From the end of 2018 until today, we've been in a clear prolonged downtrend in yields. And if we look at very long-term charts, you'll see that we've been like in a multi-decade move lower. So bottom line, instead of me trying to assume that this might be the beginning of building a bigger like bottoming pattern, I'm going to say that for the time being, you have to respect the trend. And that tells me that there is a chance that we're going to see another move lower. Now, I do understand that fundamentally speaking, expecting even lower yields from here makes no sense, but this is not an actual market, so anything can happen, right? And the more the countries get indebted, then the lower then they need the yields to be, so they can even pretend to be able to service them. So here's the 10-year yield, here's the 30-year yield, which looks more or less the same.
Yeah.
So bottom line, if you want my first point of view, don't trade it. But if you really have to trade it, in my opinion, don't fight the trend. And if you do see this channel breaking to the downside, don't try to fade that move, because I wouldn't even be surprised to find out that we can actually produce even a lower low. I know it's not easy, but in my opinion, it's far away from impossible as well.
Okay, Steve.
You have
Michelle
an interview?
Schneider. Yeah,
Ah,
Michelle is with
Okay,
us.
good.
Okay, nice look. Yeah, one negative day would break that trend and
I'm
take
not sure
it
about
lower.
1, but 2, 3 for sure.
Yeah. All right. Thank you, Steve. And
Thank you, Dale. Enjoy the interview.
Michelle's one of my favorite intra-market analysts and traders. So I'm curious as to her year-end look. Okay.
Dale, can you hear me?
Got you, Michelle. How are you? Welcome back.
Thank you. How are you?
Doing okay. Looking to wrap up 2020. How about you? You ready to say goodbye?
Oh, yeah. Well, yes
Yeah.
and no. I mean, I have to tell you, obviously, it's been really, really hard to live life in the COVID world as far as our social life and not seeing my family, not doing the things we love to do, simple things like going to a movie.
Yeah.
But on the other hand, business-wise, it's been an incredible year.
Yeah.
And
I mean, you've been on top of this commodity trade for about a year now, talking about silver and sugar and having fought the tape with stock indexes, and curious what in this COVID era, what your family, your just not your personal family, but the family of intermarket relationships is saying going into year end. So if you could share your screen.
Okay, that's what I was going to ask you, if you wanted me to do that.
Yeah, it's that green box.
Right, got it. Okay, so you should see it's a chart of Microsoft because I wanted to show this because to start, and I'll get to the family only because I've one of the things that happened to me this year, which has been really wonderful, has been I hired a publicist who has really helped me get booked on a lot of different stations, including Fox Business, which I'm on again today with Charles Payne, Making Money with Charles Payne. So that's been exciting because I've had an opportunity to say things that are not what everybody else says.
Right.
which is so typical of me, right? So you've known me for years.
Yeah.
And people don't know things like a relationship between a family when you go out there into the media. And they don't understand some of the aspects of being a floor trader. And so this is what we're going to explore with the Modern Family. But I wanted to start with this because I thought this was such a great example. I've been saying that stocks like Microsoft, Amazon, and Nvidia, and probably at some point Google, although that's certainly not been set up yet, in Facebook. But right now, those three have not been where one should put the money. And if anything, if the market corrects in particular, obviously, if the market continues to go up, I wouldn't short them. But if the market corrects, these would be the places that I would go. And these people have been looking at me like I have two heads because, what? Microsoft, these are going to go flying. And I've been trying to explain to them that the big tech is not necessarily going to go down, obviously, when the market's going up. But if you look down below here, what you're seeing is a momentum indicator. And the momentum has been so negative. This is a 50-day moving average. This is a 200-day moving average. And Microsoft was really low down here while the market was going to new highs. It's popped up a little bit here up to the 50-day moving average with the move that we had yesterday. But if you think about the market on new all-time highs, and that something like Microsoft is not even where it was just a couple of weeks ago.
Or even September 2nd or August 30th was a high for many of those FANGs.
And exactly. And right. And it's not so different here for NVIDIA. In fact, NVIDIA is not even it's not even above the 50-day moving average. And Amazon, which also popped yesterday, still hasn't gotten to its 50-day, even though it cleared it. So essentially, what I'm really introducing you to here today is something we haven't discussed before, something that we knew from the floor because we could feel it. But what we but you can't see on a price chart is momentum. It's invisible. When we traded on the floor, of course, as you know, you could see the order flow starting to wane. You could see the enthusiasm of the particular brokers waning. You could see the velocity waning. You can't see that on a price chart. You could see sideways action or whatever, but you can't tell if there's a momentum shift. And so this is really something that we have put together with this indicator called Real Motion. And it's available on stock charts. We have it too. And I'm not trying to sell it or anything. I'm just saying it's really been an incredible guide to add this to our family. So if we go now to the family, let's start with IWM.
What are the dots, Michelle?
Those are Bollinger Bands.
Okay, but the red dots, if that's the color, just a little.
Oh, that's just showing where the momentum is in terms of the. Yeah, right. So that's the momentum. And then you have, like I said, you had the 50, the 200. This is the zero line here. Obviously, if things are below, then they're negative. And then you have these Bollinger Bands in here. So let's start with IWM. Now, IWM, obviously, you could see how perfect it was when it broke the 50 right at the end of October. It broke the 50 in the momentum, but the momentum immediately held. What we look for is not so much when they're in line, momentum and price, but when there's a divergence. And so this is something people keep asking me, are we near the top? Are we near the top? It's got to be the top, got to be the top. And so this is something to watch out for. Look what happened yesterday. Even though it made a new high, the momentum came off a little bit, right? Now, I'm not saying that in and of itself is negative, because it would have to show me more. Like we'd have to have some type of price confirmation. But considering
there might be a reason to get out of longs, though. What do you think?
Well, I would say
short.
I wouldn't get short, not yet. Although I know people are chomping at the bit to do that. They are. Everybody wants to pick the top. They want to be the one to say, I picked the top. And that is just silliness. Essentially, what you really want to do now is, I'd say, we're coming to the end of the year. Take it easy. My God, if you haven't made money since March, April, you're not going to make your money in these next 2 weeks of December. Go take a break and think about what you want to do and where you want to be for the 2021.
Great advice. Great advice. It's kind of like people, I say, don't try and make your week on Friday. So don't try and make your year the last couple of weeks of the year when liquidity is low.
And the market is extremely overbought. And the exuberance is irrational. And as we can see here, what's been leading the market up, which is the Russell 2000, incy-bincy little bit of slowdown in the momentum. Now, today it's coming in higher. It's gapping higher, actually. So we may see that flip right up. But at this point now, we have some resistance here that's going to follow along the Bollinger Band. So again, not negative. I don't want people to say, oh, Mish is bearish. I'm not. What I'm saying is that we're getting now maybe a little bit tired on the upside, but there are other things that we could look at, and I want to show you. So let's also look at Granny Retail. So this is the wife of Grandpa Russell. And of course, the great thing about this year is that the Modern Family has really outperformed and has done what they hadn't done in years, which is outperform tech. and
Right.
NASDAQ. So we love that because that really reflects the optimism in the economy, which is completely the opposite of what the Fed was saying yesterday, which is they're not very optimistic about the economy, at least not through the first half of 2021. And of course, we're seeing that K-shaped recovery, et cetera, et cetera. But what we're seeing here with retail, and this is now, well, hard to tell the bid offer here before the market opens, 61.63 at 63 bid, is what's going to happen here. The high up here is at 62.75. So it looks like it might come in above that. It might not. And again, the momentum followed along here and coming down and popped up a little bit. But if we cannot clear these highs of this momentum right here, and the price starts to come off, again, a signal, not bearish, but don't chase, right?
Right.
Here's the one that I'm really most concerned about, and this is transportation. I have, in my many years of trading, have seen transportation as one of the greatest beacons. And there's fundamental reasons for that. Transportation really is the demand side of the US economy. Obviously, Charles Dow figured that out in the 1800s. And so hence he came up with the Dow index, transportation index. And so I have never stopped following it. Now I use IYT, some people use other ETFs or what have you, but for me, I've always found this to be really reliable. I can't tell you how many times IYT has shown me a top before anything else and has shown me a bottom before anything else. I mean,
What's the average lag time between the rest of the market picking up on what the transports are saying?
It could be anywhere from a day to about a week and a half. Right. So there you go. That's why let's see where December plays out. I mean, to me, that's how I'm looking at it. So now look what happened. You had this big candle down a couple of days ago. And since then, we really haven't done very much to impress. Now, again, talk about a bid offer spread here, 217.86 bid at 227.24. We don't know. And obviously, if it can take out this high of 228, it's off to the races. But come down here again with the momentum. We're sitting right above that 50-day moving average. If this breaks the momentum to the downside, you wait for the price confirmation for it to break to the downside on the 50. But more importantly, forget about the trader mindset. Just more importantly, what it says about the market is, yes, this could once again be the beacon that things are starting to roll over.
Can I ask a question about your market gauge? Is it possible for the transport to make a new price high without your dots, without them making a new high?
Absolutely.
And have divergence between those two?
That's a really good question. And there are many examples of that. In fact, we see an example right here. Okay, so you see the momentum.
So it's already happening.
So there you go. We had a new high and a new high in momentum. Then we had another new high, and look where the momentum was. It never quite got as high as that first one over here. So yes, it's showing you that the rally, at least in the transportation sector, is getting tired. Now, there's again fundamental reasons for that. Partly is seasonal. Obviously, maybe people are not spending as much money, but more importantly, there's also another factor, and that is that we have a situation now where Amazon and a lot of the stores are saying, don't expect your delivery on time. We're so backed up. So there hasn't really been a good delivery time with FedEx and UPS because they're backed up. So it could be a good thing, and we're seeing a momentary lag, but it could also be something else. We don't know. This is
consumers spending slowing. I think that was the number yesterday.
Yesterday, retail sales. And by the way,
retail sales,
the jobless claims came out this morning, higher, 3-month high.
Yeah.
So, people, the other question I get all the time is, well, tell me about the disconnect between Wall Street and Main Street.
Yeah.
And it's not quite as big a disconnect in one way, and that is somebody like my sister who has a good job, has had the same job for 30 years. She has her 401k at record highs.
Yeah.
So people say the disconnect between Wall Street and Main Street, but a lot of people on Main Street have seen nice returns on their 401ks this year. So there's a disconnect, but not really. And so the biggest disconnect, of course, is for the people who don't have 401s and the people who are really impoverished. Yeah, and that disconnect has been going
No
on.
real estate, no equities.
Exactly. And that
Just sliding down the ladder of the K, the lower part of the
yeah.
K.
And is that anything new? Not really.
No.
Yeah.
I've
If
been
I
on
had
that ride.
if I had one thing that I could do in my life, that if it really what I'd want to do is try to show people that you can make money in the market even with a very little investment, especially now they make it easier and easier with 0% commissions,
Right.
fractal ownership, micro minis, things like that, because that's how I got started. But anyway, I digress. Let's move on. So now let's take a look at a couple of the other sectors. So Ibb Biotech, obviously big news this year with all the vaccines. So what we're happening here now, again, momentum. If you look at the momentum at this peak here, the momentum was higher with this peak here. I mean, the momentum higher then than it is now, right? Lower now than this peak here, starting to break down under the Bollinger Band. Now, again, today we'll see whether or not this rally sustains and what happens with momentum. That's why I'm not recommending anything to buy more or to start going short. We're going to look at the outliers, but let's go through the whole family while we're at it. So this is regional banks. Now, regional banks is actually at a momentum high.
Yeah.
So this, interestingly enough, could be the opportunity. So what do they want? They want yields to be higher. But right now, yields, which were higher, what's interesting, and we're going to get to this, is one of my clear warning signs is the TLTs, is the long bonds. And right now, today, as we're speaking, TLTs are actually up with the market up. So that
Isn't there
means,
a big commitment of traders position? I think commercials have their biggest long in bonds in many years, or there's record shorts by specs. But yeah, so you think that TLT and bonds could rally, and that might imply some risk off down the road.
absolutely. It's one of the key things I'm watching. I'm watching 4 things, which we're going to talk about after we go through the whole family. So if that happens, interestingly enough, that could be good for the regional banks and the big bank sector. This is nowhere near all-time highs like we've seen in the other members of the family, but it's had this huge amount of consolidation over the last few weeks. So that could be an opportunity. Now, obviously, if the whole market goes down, everything probably goes down. But this could be an interesting thing to keep an eye on. And then finally in the family is, of course, the semiconductors. And the same situation that we saw before is that when it made a peak high here, we had peak momentum, and that's a good thing. Now that the price has come off, the momentum has come off. What we want to see now, here's what happens with this a higher open we're getting at 218, still not taking out the high, which is 221.79, but let's keep an eye on this. So that's where we're at. We're at, except for regional banks, we're at a very interesting point where the price and the momentum are starting to diverge. What does it mean? We don't know yet. We don't know. TLTs.
But to be aware of, though.
It's definitely okay. Now, TLTs have had a negative momentum. They have.
Right.
They were positive, but when I started looking at them was here when it was holding this Bollinger Band, and you're seeing there's some support here on the Bollinger Band. And now with this move up, take a look where the 50 is. I'm looking for a move and hold over 159, and to see the Bollinger and to see the momentum start to creep up back over the 50-day moving average, which it hasn't been over since July. So if you see a shift here, not just in momentum, but also in price confirming the momentum, I think that spells a little trouble.
Yeah.
And need I remind you,
at least maybe to the green line, and then if it gets through there, could attack the double top.
Well, let's take a look here what happened when everybody was going nuts to the downside. This already showed, well, it didn't show a divergence here because you see here momentum was under the 50 and price was kind of up and down, up and down. Soon as this broke the 50, this is when this party got started. When it broke the 200 is when we had the huge spike. And look, you had the spike in momentum right at the high. The next day, the momentum really took a big drop, and you knew sort of the bond move was over at that point. Now, of course, this was extreme volatility. So let's also take a look at my other 3 indicators here. So this is LQD. This is the high grade bonds, right?
Yeah.
This has been the Fed's playground. They've been buying high yield corporate bonds since the swoon.
Okay.
And again, another good indication, because if this starts to wane right now, still strong bullish phase, not as high as it was up here in July, August, but nonetheless, and the momentum, I'm not seeing any major divergence at this point, other than it broke the 50 here briefly when it sold off, didn't exactly sell off here yet. But I'd be keeping my eye here as we're going into 2021. What's going to happen with the with the high grade bonds? Is the Fed going to continue to play here? There was a huge amount of liquidation in this earlier in the week, and now you can see they're still holding. If this picture changes, that would give me a message. If we look at the other total risk on, which is junk bonds,
yeah, they look better.
They look better, except
and the
that
Fed's not in the junk bond market, are they?
I think they are through BlackRock.
Oh,
Yeah.
okay.
Yeah.
Right.
I don't quote me on that. I'm pretty sure. Yeah. But nonetheless, it is a Fed playground to me, because this is the ultimate risk on. And right now, again, we have consolidation. It's coming in a little bit higher again. The momentum started to wane, but we just had peak momentum with peak price. So nothing here.
Yeah.
Exactly. And then finally, of course, what we have to look at is volatility.
Okay.
Now, there's a rule of thumb with volatility. Under 20, bullish for stocks. Over 30, bearish for stocks. What's interesting about the volatility is on these new highs, we have not taken out anywhere near the low lows that we had in 2019, and not even taken out the low lows that we had more recently in the end of November, beginning of December. So that's interesting. Already we're seeing a little bit of a divergence in the price, and people are watching this, obviously. Momentum is not great, but again, you want to see what happens if this starts right now. If it holds 20 and starts to move up over the 50, or we start to see the momentum increase, then it's another sign. So what's the moral of this story?
You asking me?
Oh, I'm asking you or myself.
Yeah, are you asking us? The moral of the story is that there's a lot of things where momentum is not confirming price. Bonds might surprise people, because most people are looking for higher yields now. They weren't 4 months ago, Michelle, but they are now. And curious what this will mean for commodities, and maybe we could wrap with that if you want to talk about sugar or silver, or a lot more people jumping on the bandwagon that you talked about a year ago about the undervaluation of commodities and metals, and now it's become kind of popular. So
yeah, isn't that funny?
What's that telling you?
Popular, yes,
popular?
but well, no, because I was on Yahoo Finance last week, and this week I was on Asia First. And the reason why I'm bringing that up is because both anchors, when I mentioned about food commodities, wheat, sugar, corn, and then some of the softs, they were like, "We haven't heard that before," and I'm like, really?
Yeah.
Okay, so that means that it may be popular amongst our little circle of of sophisticated traders, but it is not out there in the public. No way. Right now, all the public can talk about is Bitcoin, and Bitcoin stole a lot, which we're long, thank God, but Bitcoin stole a lot of the thunder of gold and silver this year, because people were saying that's the inflation hedge. Forget about gold and silver, no longer an inflation hedge. And I'm like, ha! Okay. But anyway, let's take a look at gold, since we're talking about it. It's been a bit of a heartbreaker here, but right now, let's start with the momentum. So we peaked low on the momentum. There was no divergence. It broke down under the 200. And now you can see the momentum obviously is picking up. And today on the open, we're going to cross over this 50-day moving average. You should have been buying it down here, actually, because you had this classic almost island bottom exhaustion gap here, and then the gap up above the 200. This would have been the day with a good risk down here. Now the risk is harder to ascertain. We want to see what the momentum does here. The momentum has not been above the 50-day moving average since August. Okay. So I don't mind being a little bit patient here if you're not already in it, because what this is saying is that it could get started. It could also be a fake breakout, which we saw here, right? We saw here. Right. we saw several times. We saw here, we saw here, we saw here.
Yeah.
Didn't quite
And
happen here.
False
Right.
breakdown too. You're having a lot of false breakdowns in gold.
Right. So, I guess really to me, the takeaway of all of this is everything is shifting and we need to give it time, and having a little patience is the perfect opportunity now, given that we're also coming into the holidays. We're going to have, basically a 4-day weekend next weekend, and then another 4-day weekend coming into the new year. By then, I think the picture will be clearer with gold, with the market, with all those outliers. Let's also take a look at oil. Why isn't this? I'm screen sharing, but for some reason this did not change. Oh, it changed on my screen. Hello?
Yeah, I'm here.
Dale?
We're
Okay.
here.
Yeah, what's happened is that it changed on one screen. It changed on one screen, but it didn't change on what I'm sharing with you for some reason.
Okay, well, you could do a new share or just, oil's been really acting well. So if you just want to.
I want to show you that.
Okay.
All right. So let me, I'll tell you unfortunately, I'm sorry, guys, I can't show it to you. But if I could show it to you, what you would see is the oil is also up. I would love to be able to show this to you.
There it is.
Oh, great. Oh, good. I'm so happy.
Delayed fuse. Okay.
Yeah. Okay. The reason why, look at the momentum here.
Wow.
Yeah, the momentum was going up while the price was flatlining. It never broke the 50, even though the price did. This was giving you a buy signal this is what I'm saying. This was giving you a buy signal long before. Now we're seeing the price confirm, and look at the momentum now. The momentum is starting to really accelerate. This has been the missing link for people in terms of really believing the inflation scenario. Goes against what everybody, heavily short, goes against what everybody thinks in terms of the future of the oil market here. And so this is another thing to be watching as we're going into 2021 is, why is oil going up? And what does that mean for all the other commodities?
Stagflation.
Yes. Well, right now, exactly, but the market's not stagnating, so we can't call it stagflation yet.
Okay.
Right.
All right. Well, you have me prepped for next year, and great presentation once again. Congratulations on all the coverage you're getting. That means that you're reaching people with and providing clarity because that's what you do. You provide clarity in the markets where most people see confusion. Michelle, she sees reasons and has indicators and experience, most of all, to be, so you could be in tune with what's happening. So, Michelle, the best way for people to follow you or participate with you,
well, there's a few ways. Website, marketgauge.com. Subscribe to our free daily blog, which is Mish's Market Minute Daily. I'm now working with my my apprentice, I guess I can call him, assistant Forrest. Chris is helping me write it, and he's learning, which has been great for me and for everybody else because he's got a different perspective. Also, Twitter at Market Minute is a great way to talk to me. I'm very active on Twitter, and I'm very, very engaged with people. If you ask me a question, I will actually answer it.
Well, thank you so much for being here before the holidays, Michelle. Happy Hanukkah, Happy New Year. I hope that you have a great 2021 as good or even better than 2020 was for you, and appreciate you coming in here and edifying our community. So thanks again, my trading warrior sister.
Thank you, Dale. I wish you too happy holidays, a healthy and prosperous new year to you and to all your listeners. Thank you again for having me on.
You're the best, Michelle. All right, that's a wrap, everyone. Remember, don't just count your indexes and your coins, count your blessings, and we'll wrap the week tomorrow. Adios. Thanks, Michelle.
Thank you.